Overview of capital market. Now in this slide we are going to see something about the constituents of the financial system. Now what makes up the financial system? There are three important constituents. The first one is financial markets, where all the trading happens, where all the buy and sell operations happen. The second one is the products. Now products include all the financial products that are available in India: equity, debt and other structured products. The third one is the market participant. The market participants include intermediaries and investors. Financial markets are divided into two types. First one is the money market and the second one is the capital market. The capital market is further subdivided into two markets. It is subdivided into securities markets and other lending and borrowing market. The securities market is further subdivided into the new issues market and the secondaries market. Now we are going to see in detail about each of these markets, that is the money market, securities market, the new issue market and the secondary markets in the upcoming slides. Money market. The money market is essentially a short term market. So all the products traded in money market are generally short term and they have a maturity of less than 1 year. Since all the products are of short term, generally the risk is also very low. That is, they have low default risk. Now to give some few examples for money market securities, we have CP. CP is commercial paper. CD. CD is certificate of deposits. TB. TB is treasury bills. Now these are all examples of money market securities, and all these money market securities are essentially short term securities with maturity of less than 1 year and they carry very low default risk. Capital market. Now this capital market is denoting the direct or indirect claims to the capital. Now this capital means it is the capital of the company involved. The investors are investing their money in the company and they might have direct claims or indirect claims based on the products they purchase from the company. The term is actually relatively longer term when you compare it with money markets. The risk involved in capital market is relatively high risk. Example of security in capital market is equity shares and debentures. Now both these are relatively long term securities and have high risk when you compare it with money market securities. Now equity share is actually a direct claim to the capital and the debenture is actually a indirect claim to the capital. What is the need for capital markets? The first and the foremost need is that we need to channelize domestic savings. The potential of domestic savings is so much that it has to be channelized to sufficiently power the economy. So that is the first need. The second one is the sourcing funds for public and private companies. Now all the funds that has been sourced from domestic savings will be passed on to private and public companies for their various business arrangements. The third one, financing capital intensive infra projects. Now lots of infra projects happen all over the country. Dams are being built, roads are being built. So all these infra projects involve high capital and it is not always possible for the company to pay from their own pockets to build all those roads and dams. So it is important that the domestic savings are channelized to all these infra projects. Capital market is providing that as a solution to fund all these infra projects. The fourth one, exit route for VC and PE funds, that is venture capital and private equity funds. Now these venture capital and private equity funds, they invest in lot of startup companies, lot of innovative companies. So they had already invested, now they need an exit route, that is they need to get their capital back to invest in other companies. Capital market provides a solution for these VCs and PE funds so that they can sell the shares of these startup companies and get their capital and profits back, so that they can reinvest that money in other markets or in other startup companies. The fifth one, promotes economic growth. Now all these economic activities fueled by the domestic savings and the corporate projects, it all promotes the economic growth of the country, or we can say it as GDP. So the domestic savings channelized to public and private companies to power the infra projects will actually promote the economic growth and improve the GDP. And the last point is that disinvestments. The government needs to do all these disinvestments in public sector industries, in public sector companies. When they want to sell their shares in public sector companies, then they need a efficient capital market to dispose of their shares. So that is why we need a efficient capital market in an economy. Objectives of capital market. Now what are the purpose of a capital market? To mobilize resources for investment. Lot of companies need investments, public and private companies need investments, and capital market provides solution for raising those investments. To facilitate buying and selling of securities. There should be a place wherein you can buy and sell securities with ease. So that is also one of the objective of capital market. To facilitate the process of efficient price discovery. So any company introducing the shares to the capital market will have to get their price discovered. So only an efficient capital market can do that process of efficient price discovery. The last point is that to facilitate settlement of transactions. So all these settlement and clearing processes will have to be done in a capital market only. So these are all the objectives of capital market.